Okay, well, good evening, everybody. Hope everyone's okay. Hope everyone is good. It's certainly far better this last couple of days than it was when we were speaking this time last week. So I suppose, if nothing else, there is some benefit there. Sorry, I just realized I didn't load something up, so I'm just sorting out as we go. Hope everyone can hear me okay, and we're gonna crack on. I'm gonna try and keep this as short as I can. Couple of reasons. One, my throat is killing me, so never good. I'm seeing some of you over the weekend as well. And I just don't want to kind of cover what I definitely am going to be covering there. So I will leave it at that. That being said, for those of you that aren't making it on Saturday, obviously we'll try and get that video out as quickly as we can. If for any reason there's any issues, I will cover it in a bit more detail next week. Going to be talking a bit about the 4-year cycle. A lot of people are obviously trying to discredit it at the moment. So we're going to have a look at that. We're going to have a look whether or not it's still on track. And if it is, what's that actually mean? And what can we do from it? So that's where we're going to be on Saturday. Look forward to seeing some of you there. For tonight, though, we're going to actually have a look at, okay, what's gone on? We've now had time this week to kind of decompress as to what went on. Obviously, we dropped all the way down to $60,000. We have seen some life come back in, getting to around about 70, 71,000. But we've kind of hit a wall at the moment. And so the question really is, have we found a local bottom? Or is this just a slight pullback before a dead cat bounce and a continuation back down? So we're going to have a look at that. Going to try and explore where we think we currently are within the cycle, what that might mean for Bitcoin, for altcoins, and for how you can balance and manage your portfolio. As always, if you have any questions, feel free to drop them in the chat. I will get round to them. Didn't get any questions on the question sheet, so hopefully we can keep that short. So without any further ado, let's jump into the charts. Bitcoin, a 3-day time frame at the moment. I'll just put it up so it's a little bit bigger. We can kind of see I'll leave this here because there's a cacophony of white lines at the moment. And the reality of it is we're only interested in 86 and down, really, I would suggest. So 86,000 is where the cursor currently sits at the moment. And then we've got 78,000, 72,000, 62,000, 55,000. A lot of those are sort of corresponding with support and resistance from previous dips, whether that be the tariff dip last year in 2020, in 2025, or actually that sort of like 6 or 7 month elongated ranging period from the launch of the the launch of the ETFs. Was it? Am I just making that up? Well, kind of launch of the ETFs, but basically through 2024. And we can kind of actually see, now that we have these lines on here, and it is the 3-day time frame, it does kind of marry up quite nicely, that 62,000, with where the candle ended up closing. I know we dropped through it, but actually the candle closing and reopening was at 62,400, so pretty much on that line right now. And then there's an argument to say that actually what we can see is that candle of basically price action is just ranging between those two barriers. So again, big picture stuff. We'll get excited only a little bit if we get above 72,000. Really need to start worrying about where things are going. We start closing below 62,000. And for those of you that are still in a bit of shell shock and you want to kind of stay away from the charts, then that is what I would recommend. Just keep it high level. There's so many stuff on my screen. I didn't even know if I'd actually press live, but we have, so that's a good thing. In terms of everything else, Bitcoin dominance still moving sideways. Nothing really to report there. We won't even bother zooming in on it. Total 2, on the other hand, we've had that waterfall very similar to Bitcoin. We talked about this on Friday as well. We are within that range. The difference, I suppose, at the moment is just, excuse me, where we actually find ourselves relative to previous price action. So for Bitcoin, we hit the lows of, let's get back to it. It's just, sorry. We broke through the lows of the April 2021, and then we sort of, bounced the spot, and now we're not quite, but we're almost rejecting off the base of that, the base being 74,000. Whereas on total 2, relatively bigger, we didn't actually go that far. We've pretty much just retested the lows that we found in the tariffs, and there's actually quite a lot of sense with that, really. Back in April of 2024, the altcoins fell a lot harder than Bitcoin did, and so whilst the patterns look similar, the percentage of the fall was greater. And what we're seeing right now is that altcoins fell just as hard as they did back in April, and we're finding that base there. Okay, something to, we have found support in and around that sort of let's call it 900 billion region, starting to bounce from it. But again, how can we really get excited right now with one, Bitcoin dominance sort of going sideways but ranging up, and two, total two below 1.25 trillion. I mean, we weren't even excited when it did slightly get above 1.25 trillion. So unless it's going to break 1.35 trillion, there's nothing really for me to get excited about altcoins. And that's going to be fairly reflective in the narrative that we go through some altcoins later. And certainly when you have a look at the portfolio a little bit later on, and we look at BitTensor, and I think BitTensor kind of tells the tale of a lot of altcoins right now. This does not look good. This doesn't look like what Bitcoin's done. This doesn't, I mean, yes, we've had the waterfall over. Bitcoin's had a bit of a recovery. Yeah, there was a sort of a spinning top candle, what we can see there, that green candle with a wick pretty much equal size up above and below the main body. A lot of indecision there. But ultimately, the next candle, still a day and a bit to go in it, has just fallen through. When we're at 153, we're pretty much at that level. I know Sam's talked about sort of that 150 kind of being a bit of a hibernation period for BitTensor. Be interesting to see what actually happens, because yes, of course, we may have a bounce, but in the long term, I see this going with a lot of other altcoins just further down. I joked, well, I didn't joke, I stated before about, putting buys in around about that $80, $90 level. I mean, that was more of a just looking back. I would honestly wait to see how far we go down, but this ain't looking particularly healthy for me. Yes, a huge sell-off does require at least some sort of recovery, but that excitement and that decision to buy at 160 was effectively just, reversed at 177 as people started taking profit and selling again. And I mean, unless we see a really big bounce soon, I really can see this going much lower, unfortunately. We'll have a look at BitTensor in the sort of smaller timeframes a little bit later on. So I wanted to bring up this chart first, which is, the psychology of the market over there. And I'll come to that. But this chart is on the same as this chart. This is the Wyckoff at the moment. And we were looking at a distribution phase ages ago. We were looking at this, end of 2025. And because it's the first thing that came on, I just started to have a look at it. And all I've actually ended up doing is this blue line you see here, the second blue line around 98,000. I just moved it across because actually this distribution pattern has played out very well. And in terms of sort of hindsight being 2020 vision, we can actually look back here and see there was definitely writing on the wall. But ultimately, we've had the up first, we've had the buying climaxes, we've had the tests of support lines. We lost that support line. And then when we get to this phase E down here, when we were ranging a bit, ultimately, we came back up and we rejected from that support line. And the next move down, you can see the marked down phase. And it was pretty much a waterfall effect that we've gone and had. Now, this isn't going to tell us how far we're going to go down. It doesn't necessarily do that. But we are on that phase down right now. And what I would say is that we very rarely see Wyckoff patterns, just automatically V-shaped reversal out of this. It'd be very hard push for that to happen. What we'd then need to see is sort of an accumulation phase, which is basically the reverse of this pattern, really, before we break out to the upside. But again, that marked down phase needs to continue. I did think it was very interesting, sort of how this came out. And it points out to a level that is so important for us if you wanting to remain big picture. And it is 98,000. No matter what we do between 68,000 where we are, 69,000 where we are at the moment, and 98,000, that is just noise. Yes, there's opportunity there. We'll try and exploit that opportunity if it comes our way. But unless we break that 98,000, there is absolutely zero recovery. I mean, that sounds obvious, doesn't it? Because you've got to get higher than that. But that's the level. We've got to get through that in however long it takes us to get through that. But ultimately, until we get through that level, people talking about the resumption of the bull market is very premature. So again, if you don't want to look at the charts and you're kind of just wishing and hoping, 98, If that's when you don't want to get excited again till we're in the bull market, 98 is a level that you should be looking at. So if I keep on looking over, it's on mute, but I've just got the Leeds game on in the background. We're losing 1-0. Anyway, going to the chart that I actually wanted to just sort of start with. And yes, this is overlaid on the 2017, 2018 bull and bear market. And we talked about this in the sort of lead up to Christmas and just after Christmas. And I was sort of, are we in thrill? Are we in complacency? Ultimately, I think with this side of the market. And I suppose the question really now is, where are we? Okay, because that was it. Have we had a capitulation event? Are we at capitulation? Which is signaling maybe where at the bottom of the market is. And I got to say, if you were to go through these phases here, we're certainly not there yet. I think the waterfall we had last week was the anxiety element, okay? You know, people were certainly scared about it, but it wasn't capitulation. I didn't see many people in the group running for their Trezors, ledgers, whatever, and it was just a sell, which is what we would expect down here. So I think there was certainly anxiety. The speed at which it happened kind of stopped a lot of people from really being able to do anything. But then we did find some support and we pulled it back. And the worry now is, are we coming up to here? So we have had that bounce back. And don't get it wrong, you know, almost a 20% recovery, 60,000 to around about 72,000. Feels pretty good. I mean, relative, given that we fallen 50 odd % from the all-time high. But that sort of, you know, the speed at which that bounce happened back end of last week certainly helped calm those levels of anxiety. The question now is, are we in denial? And my honest thought is this is likely going to play out. Whatever pullback we have, we don't have, in my opinion, the momentum to take it through or the narrative to sort of get towards that 98,000. And sadly, it's 98,000 that we need to get to before we can write off the denial bit. Because any move up to that is, yep, we're coming back, we're going to make it again. But actually, no. We then get moved out, we come back, and then it would be panic, wouldn't it? Because we get all, let's say we get all the way to 90 odd thousand, everyone started to think it's recovering, and the market moves again, and we take another move back to the low 70,000s. Suddenly, everybody is saying, actually, here we go. This is it. We had that second rejection. It's panic stations now. I'm getting out whilst I can. I'm going into stables. I'm going to try my luck at buying the bottom of the bear market. Maybe for some people by then it's going to be too little too late. And then, you know, this is just based on 2017. We have no idea how the candles are really going to look for the 2026 bear market. But ultimately, at some stage, there will be a move like what happened here when we went from 6,000 down to 3,000, that capitulation event, like what happened in 2022, the straw that broke the camel's back with FTX imploded. I mean, you know, we only went from 24,000 to 16,000. Okay, it's 50% from there, but it was actually $8,000. The likes of Terra Luna, the likes of 3 Hours Capital, from a dollar value, took us much further down. But that was the final thing that broke most people because, you know, retail, they were like, FTX, second biggest exchange, we're keeping our stuff on FTX. And that's when capitulation happened because people were actually getting wiped out. It wasn't the fact that, oh yeah, I'm just sitting with my Bitcoin, it's not worth as much. They didn't have any left. Everybody was spooked that that was going to roll over, and that's what called it. And then we got to the anger, and that was the time to get in. I think we got a few months till we get to that stage. But right now, for me, we're sort of, the anxiety has happened. I think we're on this little route back up. And, you know, we start climbing a little bit higher. I think people are going to start to write off what we've just had, that denial. We're going to make it back. 5-year cycle, whatever it is, that copium that people are going to take. And then, well, if it is a 4-year cycle and we're repeating what's happened before, unfortunately, the story is already written for us. So we'll see. We'll see how that one ultimately ends up and plays out. Here is 12-hour time frame. And it's a bit of noise on here. I appreciate, matter of fact, we can lose the EMAs at the moment. What I would just say with the EMAs, again, we haven't broken back. We'll look on the daily later, but we haven't broken back across any major EMA at the moment, whether you're looking at the 10, the 20, the 50, whatever. We're still below all of those, you know, depending on which time frame, but across the time frames that really counts. And so any move up right now is just an impulse. It was a reflex from sudden falling, which can come back down. And what I do find interesting with this chart, and you know I never change the fib levels on this chart. These charts are set from 2 and a bit years ago. And look what it came down and turned around on. 62,800, the candle closed to the nose on the 618, the golden ratio. That's where we've gone and hit. The wick took us all the way down to the 0.5. Okay. These have actually really played out for us. And so, okay, we're resting at the moment, sort of messing about with that sort of 67,600, the 0.76. But can we really even get excited for a continuation of any short-lived pump up if we can't get back above 74,276? Not in my eyes. And I think, when I was talking on Tuesday about, I did do Friday. On Thursday night, I think it was, I did a sell at around about 64,000. You'll have a look at the portfolio in a little bit. And on Friday, I was trying to decide whether or not to get back in. And ultimately, I couldn't really find the rationale to get back in because I'd already missed most of the move anyway. Although, had I immediately got back in, it would have been fine. But anyway. And so I was just looking at this chart and I was like, well, we're below all the EMAs still. And we're below this fib level that's played out so well for us. So unless we're really breaking those, the risk to reward for me isn't really there. Given where I stack some of my other exits, I'll just take it. I'll just, some of them you can't win them all. You're never going to get the exact top. You're never going to get the exact bottom. And ultimately, we may make the odd mistake on the way back down. But so I've held off buying anything back. And we'll just wait and ultimately see. But I do think that these fib levels have worked out very nicely for us. When we go onto the daily time frame, a bit cleaner, we'll have a look at some other fib levels to try and see if we can understand how low this could ultimately end up going. Now, let's take the next bit with a little bit of a pinch of salt here, if you can just bear with me on that one, because I'm trying to understand, have we got to a point which previously data has suggested we were near a level of capitulation, or are we just seeing a local bottom and, as I mentioned, a relief bounce? And I'm going to actually have a look at some on-chain data. Why do I ask for some little bit of leeway for the next 5 minutes? Well, we were trying to rely on on-chain data to give us the top, and that didn't really work out for us this cycle. So it's only realistic and fair to say, well, how much weight can we really give to the on-chain data? Now we're trying to find a bottom, and I accept that. And we can't do anything about it. We can present what has worked for us in the past and just use that as a guide. So one of the ones that is very interesting is the Sharpe ratio. Now, the article basically goes to say that if we get to -10, that is where bear market lows have typically found themselves. And when we have a look at where we are at the moment, we will see how close we are to that, and we can try and gauge where it is. But the Sharpe ratio itself basically measures that risk to reward potential in terms of whether or not you want to invest in any particular asset, particularly this one here. The higher it is, the riskier the reward is, because actually we might be seeing a peak, whereas the lower it is, and you would typically see that around greedy areas, retail rushing in last minute, buying the top of the market, the risk to reward's just not really there. And the inverse of that is also true in terms of when we start to get to really negative levels. That's actually the best time to buy, when sentiment's actually at its lowest, retail's scared to death or too greedy trying to get even lower, but actually the risk to reward is really stacking up for an opportunity to get back in. So this article goes on to basically just summarize that the Sharpe ratio has actually entered an interesting zone in which historically this is an area that we should at least be keeping our eyes out to whether or not we may see a reversal. Now, I don't know how well you're going to see this, so I'm actually going to blow it up onto another chart. But this is the Bitcoin Sharpe ratio. If you want to check it out, just go onto Crypto Quant, type in Bitcoin Sharpe ratio. You're going to find it. It's interactive. And this is it here. We'll blow it up onto the full screen. And this is what we can see. So for those of you that are looking at this, apologies, can't change the background of it. But in black is Bitcoin's price action dating back to all the way to 2012. Then we've got this sort of like rainbow colored heat chart line, if you will. Red signifying sort of like overheated, orange is warming up, green is neutral or cold, and then blue is super cold. Now, obviously, it doesn't take a genius to realize that red representing hot, market's overheated, and blue, it's cold, market is fairly uninteresting for retail or what have you. So hot to greed, and that's signifying in the red bars that the percentage, the risk to reward is is too high. And this typically lines with, if not peaks, then market tops. Sorry, if not market tops, then certainly peaks. And we've seen it work perfectly through the two tops in 2013, 2014 on the left-hand side, 2017 bull, I mean, all the way up, but the 2017 peak hit nicely. Again in 2021, all the indicators hit the left-hand side one of the two tops, but you can see it worked quite well. And then actually what we found in the 2023 to 2025 bull market is we did get a red zone. And it was when we hit that 73,000 all-time high first time around March 2024, which if those of you who are around then will know, that was when our alt season peaked. And if you looked at your portfolios then, it's probably your best dollar value portfolio was March 24. Meme coins were rallying and everything else. So market was definitely very greedy. But we're looking down at the bottom, okay? And what we have entered now is we have entered -9. It might be -10, which is just on the right-hand side. Can I zoom in? We actually can. That takes it down to the bottom. But we have now entered into this zone, mirroring this drop down here. And as I said, this is an area in which the risk to reward is actually far greater. This is when we should be entering the market. On the face of things, that looks great. It looks like, okay, we are nearing a bottom. Let's go. But actually, this is where I kind of disagree with what the article is saying, because history has shown that we can spend anywhere from 4 to 6 months within this zone. Not only that, it doesn't always pick the very bottom of price action. It's not an indicator of where price is. It's just effectively risk to reward, sentiment, etc. So yes, if you have 4 more years or 3 more years, now would be a great time to buy, as long as you can ride some further falling later on. And it's actually when we get to the blue color where we really want it, but even that can take sort of 4 to 6 weeks to ultimately play out. If we go back to 2022, we first entered this zone. Bitcoin's price a couple of times was round about, I mean, 30K, 29K, 24K, okay? But we know the bottom was 15,000 and it was sort of around about 4 months later. So yes, we're entering this zone now, but we could still see, 1, the time frame, and 2, price to continue. We go into 2018, we enter this. Bitcoin's price was around about 4,500. It drops down to 3,100 at the base, fairly close to that, but ultimately it then spent 4 months in and around that time. For those of you in the area at the time, 1st of April 2019 is when we actually rallied out of this. Similarly, the 2015 bear market, Bitcoin gets in the first time around about 360, but it bottoms all the way down at what, 200, or just under 200, 197. So again, around about another, what's that? 50, 60% fall in price. And so this is arguably a very good indicator of getting, picking the bottoms retrospectively. I was about to say retrospectively. But the fact that we've only just entered it is no indication that we're going to get a V-shape reversal. What I would say is there is no time in history where we've entered this and then had a V-shape reversal. So you could argue there is some prolonged pain ahead of us. But again, we'll wait to see how that one ultimately plays out. The other one that people want to talk about, I will come on to some of the comments that have had coming through there. The other one is the MVRV score. Now, whether or not you want to look at this from a short-term holder point of view or just overall general market, doesn't necessarily matter. What I would say is if you're looking at short-term holders, you have to pay for that through Bitcoin Magazine. And the last website I was on only goes back to 2023, so didn't really do us any justice. So we'll just stick with this for now. What we're looking for here with the MVRV is the yellow line. So we were all keeping our eyes on, will it get above sort of 4 or 5 to indicate the market top coming in? That didn't happen. We got to around about 3.2. But when we peak previously within this red zone, it has indicated perfectly where the market tops have been. And then when we enter this green zone down at the bottom, this has shown us periods of significant, oversold nature, prices at a very undervalued level. And whilst we're not in it yet, we're getting very close. So going back to that, have we had that capitulation? Are we finding a market bottom? Again, another on-chain metric, give me a little bit of rope here, suggesting that we haven't potentially found the bottom yet. There's still more value to be found in Bitcoin before people are really going to want to step in. And even when they do, people dip their toe in. They don't massively buy straight away. They sort of spread that cost out over a matter of months and just sort of hedge their way back into the market. But these are the people that benefit the most in 3 years' time. And so again, certainly be keeping an eye on that. We are getting to a point where Bitcoin is undervalued. Excuse me. And if you can ride it, it would be like stepping in at 21,000 back in 2023. You'd still even now think that was a good price. So unfortunately, the fact that we are admitting we're in a bear market, we are now having to reevaluate our horizon. We are now talking about 2028, 2029. And that's just the reality of where we are. And once you can accept that, you can start to try and identify opportunities to get in if you're someone that wants to do a sidestep. And if you don't, and you're just going to sit and ride it, absolutely fine. Don't worry about that. And then we get other sort of discussions here about, was Bitcoin 60K the bottom? Is it actually just marking a halfway point from the bear market? I was trying to really think about what they think of it. Are they talking about a time here or sort of, the drop? And so I thought we'll have a look at both. I mean, I'm not really bothered about what's actually said in this article. It was more the title that kind of gave me the idea to have a look at some charts. So I've kind of thrown this chart on here. And what we've got, Bitcoin weekly time frame. Let's just try and denoise this as best we can. Weekly time frame. Appreciate it's small. I'll zoom in a little bit, but I've tried to get as many bears bottoms and bulls heads in as possible. So we've certainly, you can't see it because my head's in the way, but we've got the bear market from 2015 all the way up to 2017 bull market, down again bear market 2018. You get the point. And then we've got the previous two. So I'm just trying to sort of have a feel of, okay, how long did each of those last? Well, the reason we talk about the 4-year cycle is just a symmetry within each of those cycles. So effectively 3 years, not quite, but effectively 3 years of up, 12 months or 1 year down. So it is no surprise that when we look at 2017 to the market bottom, it was 52 bars, so it was a year. When we look at 2022 to the bottom, 2021 to the bottom in 2022, it's 54 bars, so just over a year. And so I don't really know how far to draw this out, so I just thought, well, I'll just draw it out at 54 bars. That's the longest one we've seen at the moment. And if that is the case, then we have until around about mid-October till we potentially find the bottom. I'm not here to try and scare you. I was just trying to work out, well, how far are we into this? We're 18 bars in. We're almost 5 months. Actually, I think we're probably more than 18. Oh, this will be 19. Okay, yeah. So we're 18 weeks into a potential bear market here. So not quite the halfway mark there, but how much have we actually experienced on the way down? And the reality of it is, from October the 6th high of 126,000 to the 60,000 we had there, we had lost just shy of 52%. What's that relative to previous market drops? Well, this is where, again, we haven't had that much data on it. So we can only go with what we've seen. And for those of you that may not have looked into it, but you've just heard people, old timers talking around the metaphorical campfire, typically Bitcoin falls anywhere from 75 to 80% in a bear market, alts between 90 and 95. That's kind of the narrative. We kind of see where this comes from. So if we go from 2017 top to the 2018 bottom, it was 84% fall, okay? So it's from 20,000 down to 3,000, $16,500 worth. In 2021 into 2022, we went 77%. It's around about $53,000 worth of dropping from 69,000 all the way down to 15,800 or whatever it was. So how far could we realistically fall now? Well, there's an argument to be made. Well, it's dropped by 7 each time, so maybe we do it to 70%. If that's the case, what level are we potentially looking at? Around about 38,000. Okay, pretty scary to think, well, we're at 70 now, got another 50% of that value to fall, 70% of 124,000. That, if that happens, that's when we're talking about anger. That's when we're talking about panic and capitulation. Another drop all the way down there. But what ties in with 38,000? That's the price of Bitcoin at the start of the launch of the ETFs. I can really see round tripping that sort of significant level could certainly be on the cards. We could obviously always fall further. Obviously, you know, if we go to 77, it's taking us down to sub 30, I'm afraid. 84. If, you know, we're getting back down to 20,000 flat, pretty much, almost round tripping the entire move up. We can't rule it out. As much as I want to say it's never going to happen, I honestly can't sit here hand on heart and say that it hasn't. But the point being that we haven't really, as painful as 50% has been, from a time point of view, we certainly haven't explored the full duration of a potential bear market, if you believe in the 4-year cycle. And drop-wise, 50%, as painful as that is, doesn't really align with previous cycles there. And so when we clear some of this noise up, just because I want to do something else with the charts now, we kind of establish that. So what are we really looking for in the bigger picture? Kind of might give us a clue. I should have just done delete all, but I didn't want to delete any indicators. Is some sort of pattern, isn't it? I mean, that's what we're here for, is to just learn patterns and try and act from them. When we have a look at what's happened in the past, the weekly is probably the best. So 2015, I already drew it, but there's some sort of bottoming pattern here. You know, we had 2 takes at this 163 level before we moved up, coming back through. Again, 2018, some sort of bottoming pattern here. 2 attempts, 3,100, 3,400, but a bottoming pattern before we ended up moving out and launching out of it fairly well. Similarly, and I will have to zoom in a little bit here so you can see it a little bit better, but back end of 2022, some sort of bottoming pattern there, revisiting those lows, sort of 16,000, 18,000 kind of level before we move back out, with the time tying in and also the drop, you know, 75%-ish. And so far, that's not happened right now. So at a minimum, there's an argument to be said, even if we do need to range and we end up ranging for, what's that, the best part of 7-8 months, we'll likely see at least 60,000 again, just because we need some sort of bottoming pattern to climb back out of this weekly time frame we're talking about here. Gonna need something big to ultimately move it, to change that sentiment and to get it back in. So I would say at a bare minimum, we revisit 60,000, but that's to assume that, you know, 52% is the biggest drop. What we probably will likely see, unfortunately, is, you know, maybe a revisit here as we sort of range on through, then another fall down, we find some sort of pattern here, and then we go. You know, that's probably more likely what's going to happen. Those squiggles are indicative of just generally the journey, not price range or time. And it's that sort of bottoming pattern that we're kind of waiting for. And until we really get that, I'm not necessarily buying into ultimately anything else. We have a look at it from, you know, bigger picture. We're staying on the weekly time frame. I'm going to have to drink water. My throat's killing me. But we start to throw some similarities on here. So we put the 20 and the 50 EMA on. Why are we putting those on the weekly? Because that's what's going to dictate us, isn't it? You know, they dictated us on the way up, and they're going to dictate us on the way back down. They're miles away from us, but we haven't even had one attempt. Well, sorry, we had one attempt of climbing back to them. We rejected it. That was it. That was the final straw. Got to get out. We rejected from it. We lost that 98,000 level. We'd already lost the 50 EMA. I mean, how many more lives can we risk? Get out. So that's what we've done. And now we've ultimately got to sort of find an opportunity when these start to come. Oh, I thought I had my pen on them. When these start to come down, for us to challenge and take those. And that's the difficulty. I mean, even if we were, where's the pen on here? There we go. Even if we were to rally up to here, you know, in the next 2 weeks or so, get up to that 90,000, it's going to get people very excited. But unless we can break the 20, and I'll say even if we do break the 20, unless we can break the 50, I mean, what are we really doing here is just another retest and a move back down potentially. And a loss of that one there is really going to be a struggle. And then I think we break the 50. At the moment, it's so close to that 98,000, we're probably okay. But that 98,000 needs to, just from a trend, needs to be broken. So we can talk about reversing it. So there's definitely a bit of work in our way. There's one other EMA that's useful. We used to have a look at the 100 because that's what we were resting on at 86,000. But it's a 200 that really sort of we start to see whether or not we're in trouble. By the time we lose the 200, we're getting to the stage where actually there's a lot more work to be done. The reason I put it up at the moment is that is exactly what we're resting on. So that 200 EMA right now currently sits at 68,500, and we are resting on it. And bear markets have shown us in the past, we flirt with it, we mess with it, but ultimately, because we spend so long in the bear market, we end up losing it. We spend a significant amount of time below it, and it's when that 50 and that 200 recross back into some sort of golden cross, we can actually start confirming that the bull bracket is back on. So yes, maybe we find some strength right now. And if you're wondering how we find that strength, well, we're on the 200 EMA, weekly time frame. It's a very significant level. Maybe that gives us some of the impetus to actually move back up. But unless we break the 50, it will be short-lived. It will be. And it will feel great. And as I said, there will be opportunities to be had riding price up from 70K to 90K, 95K, whatever it is. But you've got to be disciplined. As soon as you see that rejection, just whatever you've managed to claw out extra in that move up. And I haven't really talked about altcoins because they can sometimes be a completely different narrative in the bear market. But assuming that they follow Bitcoin, whatever you can climb out of it, use Bitcoin as your indicator to then get out. I can't stress that enough, unfortunately. The time for taking those risks with altcoins there 2 years ago. We're now about preservations. Yes, try and take quick opportunities for any sort of rises, but ultimately protecting yourself, giving you some skin in the game for when you can get around for the next one. And I've kept the RSI on the bottom because people have talked last week, again, maybe a bit of copiism. Michael, I'll get to that in a second. I've seen a couple of comments. As soon as I finish this point, I'm going to go through, have a look at some of the comments there. So a lot of people saying, excuse me, we're getting to levels on the weekly time frame that have, only ever bounced from here on the RSI. And that is true, getting below, into the oversold territory. Every time we've hit that previously, the RSI has recovered, okay? And it started that trend up. And I think the dangerous thing here is people sort of point to, in 2018, it marked the bottom as well of price. It tied in perfectly. In 2015, it tied in perfectly with the bottom of the market. And I get that, but it didn't work quite like that in 2022. And people kind of just forget it. And I think this is the worry, because what happened in 2022, obviously with the narrative, the news and everything else behind it, everything sold quickly. And to match that, fear and greed index, which I'll look in a second, drove everything all the way down. But you can actually see, and I will pull this up a little bit better, that in 2022, we bottomed on the RSI on the 27th of June, 2022. Bitcoin's price then was 20,000. Then over the next few months, yes, we price moved up a little bit, 20 to 28,000, back down again. But ultimately, the RSI bottomed when the market bottomed on the 14th of November at 32, and the price was 15,800. So just because the RSI is down, remember, it's not an indication of what the price is going to be, because the RSI goes up or down doesn't necessarily mean that price is going to turn as well. It just means that sentiment is ultimately changing. And so, yes, we are down here, and we got down here in not quite the same amount of time, but relatively speaking, we've topped 5 months ago. It kind of took 7, 8 months for us to get down there in 2022. So we're a little bit ahead of the game, but we still had 5 more months of the RSI climbing ever so slightly and the price continuing down before we found that bottom. And so I'd just be careful with it. Yes, we are getting close. And yes, if you can manage to, carry whatever the next level of drop's going to be, because you have a pension idea like I do. Like, I haven't sold the business BTC. The pension BTC has stayed, and I'll continue to buy every month because that is much longer term. And if you can manage that, then now is going to be a good time to buy. Buying at 24,000 last time in July was great. Looking back on it now, absolutely fantastic level to buy. You would have still 3x'd from where you were. But for those of you who want to try and take a little bit more, you can't carry that drawdown if it goes any further. then just know that just because we've got to this level doesn't necessarily mean it has marked the exact bottom. The times don't really align. The fall doesn't align. The sentiment doesn't necessarily align just yet. And we've not even talked about the main traditional markets and what that might mean. So there's a few things that maybe just sort of give yourself a bit of pause. Unfortunately, we have to balance that with greed. I get it. We're not waiting for 8K. Maybe it does get down there. God forbid. But, can't always just go, oh, just 5 more K. I made that mistake in 2018. We got down to 3,100. Everyone was talking about 1,400. I waited for it, missed it, ended up getting back in at like 5,000. So that hurt at the time because it pretty much doubled from 3,100, which I watched it at. So yeah, we've got to manage greed at the same time. Right, sorry, let's get into some of these comments and then I'll come back. So, is it the case now that institutions have too much Bitcoin compared to retail and can now take profit, collude and dump on retail? This is what we asked for, right? We wanted the ETFs, we wanted BlackRock, we wanted sovereign nations. And ultimately, Bitcoin is no longer what it was meant out to be in 2008, 2009. This is that institutional store of value, still volatile, but that's what we kind of wanted for the 2021, wasn't it? So yes, they do have a lot. Yes, they have the power to buy it. There are the sailors in the world that are buying it and holding it no matter what. And, as much as BlackRock has sold, they still own 60 odd thousand. So they've still got quite a lot, under their books or whatever, under their control. So yes, they do. And the argument could be said to supply and demand, that should help ultimately squeeze that price up in the long term. So, we'll have to wait and see. Even Bhutan were dumping. Well, there we go. Do these charts take into account institutional ETF manipulation? No, not really. I mean, I don't know if you were talking about on-chain data. And for me, the on-chain analytics not working this time. I question whether or not a lot of that is maybe not ETF manipulation, but things like, Coindays destroyed or whatever. Who were the biggest people to sell to the institutions? It was Grayscale. Grayscale had held on to that Bitcoin for years. So the metrics like long-term holders, Coindays, all that kind of stuff, they had held on to those for so long. They carry a big value with those when they did some. Maybe that just threw off everything a little bit. I'm not necessarily too sure. What has happened for BTC to fall so quick? Nothing really. I mean, news sentiment, I would argue, is, gold's flying. Stock market's still doing very well. All other risk on and risk off assets are generally done quite well, despite economic data sort of suggesting that maybe we should be really worrying about recessions and everything else. And so the argument even more strengthens to 4-year cycles, just its time, and people always try and find a news story to relate to TA. I get it. I do as well. But ultimately, we set out looking for a top in Q4 2024 with 2025 with an all-time high. We achieved that on the 6th of October, earlier than most people thought. Since then, Bitcoin has fallen as smart money has effectively sold. And, there's an argument we can go down that money market, market manipulation, market maker kind of theory of they're driving that price down because they're filling their buy orders. They're not the ones that necessarily selling. They sell when the price is going up, etc. Yep, all of that kind of stuff. All with these, BlackRock, they're not just going to go, right, we had our little 3-year experiment, we're out. They'll take advantage of the price being low and they can buy more, Plenty of people who bought into the IBIT ETF will have made money. And so, look how much people made over the first 2 years of this. This is still a great investment. They'll be putting pitch decks out on that. Now look at this thing, it's falling down. Great, perfect opportunity. It won't disappear. Whether or not some of these altcoin ETFs that we thought were going to happen, there's 68 of them going through SEC approval at one stage. That's gone very quiet. So maybe some of those fall by the wayside. Institutions dumping. I mean, they have sold. There's no, you can't look at this chart here and not see that the amount of Bitcoin held under the ETFs has fallen. It's hard to gauge, but it's probably gone from around about 63 to about 57, maybe 55. So a decent chunk, sort of 10%, but it's still a hell of a lot that's being held. There's not too much buying going on at the moment, although Grayscale did end up, they don't normally buy that often. They bought a hell of a lot yesterday for them. So that was interesting. Anyway, um, institutions want to take profits too. Absolutely. End of the day, they do. And if they, like I say, these institutional investors may have thought, I want to start buying spot gold. I need to realize some profit from other investments so that I can do that. Oh, well, Bitcoin's 3x and it's only taken me 2 years. I'll take some from there. There's plenty of stuff like that. I think institutions don't care about the tech. They just want profits. Does anyone in retail really care about the tech? I don't care about the tech. I mean, I appreciate the tech, but I still can't wait for me to spend my Bitcoin or whatever. I see it as that store of value. And that's what we've created it now. It's no longer about geeks sending money to each other to buy pizzas for a joke or to do some work or whatever. It is now about store of value represented in BTC. Of course, in the future, with the death of fiat currencies, we were all hoping that everyone's just going to gravitate towards Bitcoin because it's been around for long enough, and enough of the big players have it. But yeah. Sorry, Michael's then put, what would you recommend, Harry, if you were stuck in Tau? Sit and wait or get out and take the loss? Me personally, I got to be careful what I say here. There is never a guarantee that any altcoin will survive. I don't care how good the tech is, I don't care how big the community is, and I don't care what number it got to in the previous cycle. There is no guarantee that any altcoin will survive. And in a bear market, all bets are off. Like if you were in RT back in 21, even if you were in RT before then, and maybe even slightly after, you would have known, no matter what, we sell in the bear market, we ride it out, and we never automatically go back into an altcoin just because we did it the previous cycle. I made that mistake with Near and with Polkadot. And they didn't end up too well for me this cycle. RT made that mistake before with ADA and with Neo and Gas and Ontology and a few other ones from 2017 that worked, So there's no guarantee that that's what it's going to be. And for me, and my risk reward is completely different to a lot of other people. I'm going to take the profit that I still have. I'm going to sit on the sideline. I'm going to try and take some back to the bank if I can. And then I'm going to get myself ready. And I will look to trade more, which I am doing. And just try and take advantage of whatever the market can present itself to me during this, however long, 12-month period, if that's what you want to buy into. So I don't know how big your loss is, but what I can't guarantee is how far BitTensor is going to go. And it seems you've asked the question. I mean, let's put it on. Let's just clear this up. Cancel. Just a second. Sorry, just a second. This. One thing we can all agree on, BitTensor's been in a downtrend for 2 years. Yeah, all-time high was made March 2024. Okay, $780. So how far down could this asset go? Let's draw it out. If it falls anywhere from 90% to 95. And I don't buy the narrative of, but this is different. Until it's proven wrong, no altcoin is different. Okay, people thought Solana was different. It went down to $8. Right. So where do you want to take from? We'll take from the all-time high. It's fallen 80% at the moment. That sounds like we've done the worst of it, but actually, as you get further down, the dollar price falls a lot faster than the percentage does. So we get to 90% would be 80. Yeah. And then $95. I'd have to squeeze this chart. We'll be taking it down to 40. Now, there's absolutely no reason why that can't happen. We can look at any, and I will show you some on CoinMarketCap in the moment, that says it could do that. And that's me, by the way, being generous and taking it from the all-time high from 2 years ago, not from wherever it managed to achieve itself before the market decided to give up on crypto for 12 months. You know, if we do that now, we take it from here, that 95% is down at 25. That is a scary price. I get it. But we can't write it off. And that's the reality. Like, we can all wait for someone to tell us it's going to be okay and that reassurance to get us through. And that's fine. We can. Now, if it makes its recovery, fine. If it does, that's great. But look, you know, I mean, Tron is probably a bad example, but we'll do Solana. So look, its peak was 247. In the depths, it got to $8. I should have just done it on this. Where's Solana? Not that one. Sorry, Solana. Yeah. So from peak to trough, it fell 97%. One of the biggest tokens. Yes, it made its recovery, absolutely. But this thing, with all the utility that it had, I guess it had associations with FTX, but it still fell 97% in the bear market. Why would any other altcoin be different? We'll take another one. Just at random this time. We'll just scroll down and say stop. Okay. Flare. Was Flare around then? I'm not sure. Algorand probably was. Algorand, look at this. So in September 21, it got to $2.30. The depths of the bear market, Jan 23, it got to 16 cents. So it lost, I have to do some maths in my head, about 93, 94% of its value. Okay. I mean, it's down 97% from its all-time high as of right now. So I maybe I've labeled the point there, and I please do what you want to do. Obviously, the other people in the group have a completely different view from it, from a fundamental point of view. So if that gives you comfort, then absolutely go for it. But for me, I just see, right, we're in a bear market. I'm not interested in alts. And I got out 290, and we're pretty much 50% down from that now. So I'm all right. I'm sitting there, but it's been a slog. BitTensor, if I hadn't done sidestep trading for BitTensor for the last 2 years or year and a half, I'd have been massively down on BitTensor. I reckon when I pull all the figures together, I'll probably be just about break even, maybe a little bit of profit from it. And that's from trading it. So, and I haven't even got onto subnets. I mean, yeah. So that's my opinion on it. And I'm sure come Saturday, if you're at the cuddle on Saturday and you need some hype, you're going to get that hype, okay? And that's going to at least help mentally maybe recover it. But in terms of, how do you get out, why do you get out? It's all now about how much have you lost? How much more can you afford to lose? How long can you ride that loss for? Can you just crystallize the loss from a tax purpose and then, ride it out that way? So many different things. Could I see it running up to 200, 240? Absolutely. We'll have a look at that in a moment. Right, sorry. Let's go back to a few more quickly here. We should have taken profit in 2024. Yep. On-chain, okay. There's an argument that BTC led the way up compared to stocks and gold, silver. Yeah, I do love you posting those sort of like BTC versus gold, BTC versus NVIDIA and all that. I mean, gold's had I think gold's had such a hyper move over the last year. It's hard to show if it's broken trends because it was always going to do that or what. I just don't follow it enough, but I get your point there. HBAR, Solana, XRP got approved, and those 3 approvals, marked. Okay, that's for ETFs. Yep. BTC breaking base support of gold was a good topping indicator. Absolutely. The important thing to remember regarding alts is we haven't even seen the stock market correction. Correct. That's another thing. So when everyone's been talking about sometime 2026, we're going to get a snap recession. As in V-shaped reversal, much like what we got in 2020. But we will have, if that's the case, we're still going to have that drop down. Bitcoin's going to plummet. What's that going to do to alts? Let's say Bitcoin falls another 50%. It does go from 70 to 40,000, 42,000. Alts will fall. If Bitcoin falls 50%, alts are going to fall 70 at least from their current position. So it's a hell of a big move. Ultimate Session Scary Cocktail. It's also a cocktail that hasn't been made before. I think you have the same problems myself. My Tau holdings are probably down 60% in value. this is the problem you got now, Cliff, isn't it? Of, do I just ride it out and I wait another 3 years and you know, we cross our fingers and we take the loss? Or do I go and, forgive me here, I'm making up the figures. I had 100 grand, I've lost 60%, I've got 40,000. I'm going to take that out. I know there's another 6 months of pain, and I'm going to try and find a bottom. And you know, Tau is no longer 150, it's 80. And suddenly that 40 grand is like having almost 80 grand's worth when you were thinking about whether you should get out, because it's gone from that 160 down to 80. You've still got the dollar value. You can purchase it. Now, again, there's a different kettle of fish there in terms of subnets and in terms of staking rewards and all of that kind of stuff to maybe offset some of those losses. And, you know, I don't know how active you are in chopping and changing and all of that kind of stuff. But I do see comments in here, you know, in Discord, like, you know, Mark's put here, and apologies, Mark, but, you know, dread the changes now because, you know, you've got to keep on changing them and you end up being down. And that's the reality, is unless you now have the time to keep up on top of it, you go away for holiday for 2 weeks and you can't keep on top of it. It can absolutely cripple you in terms of the position you find yourself. So it's all about what you can manage. And, you know, it's sad at Cliff and Michael, I don't know how long you've been, you know, in this market, but to think potentially you've had 3 years of a bull market and you're still talking about being down is, to me, is wild, isn't it? And you're not alone. You're not alone. There are countless people in crypto that are still down when we're in a bear market. And okay, you don't leave at the top. But even if you had bought Bitcoin, I mean, we've got off track here and I apologize. But if you had bought Bitcoin late, let's say you got in a year after the bottom, April 23 at 30,000, you still would have 2x'd, 2.5x'd now after all of that drawdown. And you could have just been sat there like, okay, I didn't get my 5x, but I'm going to cash out. Still 2.5 my money in 3 years, better than, you know, betting on the stock market or what have you, and just go from there. So there's a lot to be said, and I was a sucker for it as well in terms of, you know, when I got back in, and most of my money probably did go into alts, and it's taken me this cycle to really realize how stupid that was of me. And I'm just thankful that Bitcoin did what it did. So that's kind of helped offset there. I'm probably the same. Yep. Okay. Subnets, 24/7 job. Yep. You have to monitor money. Exactly. Cut them on, I think. Well, look, I'll be more than happy to have a chat with you individually if you want to have a bit more of a, let's have a talk and you can actually say something to me rather than texting it out. We can have that chat and you can try and understand where it's at. Please don't do knee-jerk reaction off me. And as I said last week, you know, we have had quite a significant fall. So if you are thinking about getting out, it's about looking at levels to get out, not just I'm getting out. Anyway, okay, right, I digress. So fear and greed, not looking great. We're at 9, okay? We are low on this fear and greed. We got low as a 6, I think. We got a 6, yep. 7. The lowest fear and greed has ever been in the entire history of the fear and greed, dating all the way back to 2018, is 5. We were 1 point above that. There's still people out there, well, Paul, who thinks that it's just a pullback. We're in a bull market. You know, I mean, I can't quite get my head around that at the moment. And that's not me trying to, you know, score some points off just finding someone big that said that they were in a bull market. The data doesn't marry up to me. And when you've got fear and greed this low, yep, of course, when there's blood in the water, buy. And as I say, that works if you can ride it now. If you've got some spare capital that you're like, I'm all right, it don't matter what happens over the next 2 years, 60,000 is probably going to be a great spot to buy. But we also, you know, these people are talking about it's going to shoot back up. Where's that coming from? Where's the greed coming from a 9 at the moment? I just don't necessarily see it. Yeah, sorry, Bijan. We'll quickly look at ETFs. It's kind of still a mixed bag. Plenty of red on the screen. A couple of black days. And it's interesting because, you know, BlackRock, they don't buy or they sell, and then they go and buy $250 million in a day. And you're like, what's going on there? 2-1 to Leeds. No, to Chelsea. Sorry, 2-1 to Chelsea. Leeds have got to go back. Okay. We did Algorand, fine. And we're going to have a look here. Okay. So let's take a breath. Let's have a look at where Bitcoin is on everything else. Let me have another drink of water. So this waterfall, and what can we see right now? So we've had that fall back down, that 640. At the time I drew that line on Friday, that was the bottom, but we know it got down to 60,000 and a dollar, I think. So that's that, sharp move back down, plenty of vectors on the way back down, including that big red vector. And when we go on the lower time frame, we actually see it's a stopping vector candle as well, interestingly. Then we had that great rise back up, and it felt fantastic on Friday, didn't it? Going from 60,000 to 70,000 in a day is just what we kind of needed. And then suddenly it's like someone's pressed pause on the buy and the sell button. We've just stuck at that price for 4 days. And I'll be honest, that does worry me a little bit because, we needed to capitalize over the weekend when nothing else was open on continuing that move up, and we haven't. And suddenly we're starting to get a little bit of a picture of potentially why. I talked to you about those EMAs, the 10, the 20, the 50, the 200, the 800. We hadn't broken any of those back up on the way up yet. Well, the 10 on the daily is probably the lowest time frame I'd go on where I'm actually interested in it. And we haven't, it's 10 EMA. We've not really tested it, granted, but we've not broken above it. And it's falling steeply. It only takes the previous 10 candles. So this thing is falling fast. On Friday, it was at 79, 80,000. Now we're at 72. Tomorrow, we're going to be about 71,000 on this thing. So it's really catching up. And rather than price moving up to it, price has stabilized for this to come back down. And my worry is that actually we're going to reject, and this is going to turn into a dead cat bounce, and we'll either completely revisit this or we'll fall through it. And then you got the whole plethora of everything else. If we break the 10, I think a journey to the 20 is fine. I was kind of thinking sort of like 78,000. I think we talked about on Friday being a recovery zone that I would be interested in looking at, just because clear up some of those vectors there. And I think at the time, the 20 EMA was in that range, but also the 50 is going to sort of over the next couple of days kind of get to the low 80s, maybe dip into those sort of high 70 areas. And again, could ultimately be that level of turning around. But the 50 is about to cross the 800 EMA there, just sort of building on that sort of negative kind of, or the levels, the difficulty in ultimately trying to get through those there. So it doesn't look great on the daily time frame. Friday when we went live, it was pretty decent to see the green candle forming, and we talked about we have to carry on this momentum. We haven't, and we're just sort of like moving to the right, and I can quite easily see a repetition of what we had up here, where maybe what we end up doing is we just sort of slowly move back up and then we end up dropping back down. And so, that's something that we can have a look at. We need a couple of tops and bottoms to fall to make sure we're in that zone that we can start to look at to kind of trade that. But that's sort of an area that I would be considering and looking at. In terms of dropping it down to some lower time frames, I mean, again, now with a 4 hour, we can really see, okay, the 20 and the 10 have kind of gone flat, and they're almost sort of just intertwining on each other, but we haven't got through that 50. What do we need to do when we get to the 50? We need to break it with a vector candle, don't we? So this, to me, again, is now looking like our best chance of finding that is maybe having another move back down here and then getting another run up at sort of a sharp level up there with a vector candle to take it off. And if you look at the RSI, I think it was deep red down at 11 at the base of this. But it's kind of just got back into neutral territory now. Could do absolutely anything. Just let me know if the stream's buffering. I just got a warning sign, potentially it is. Let me know if it is. I will see if I can do something about it. And so, there's a lot of noise in terms of vectors up here. Of course there is. And, we start breaking through these, then maybe we can start talking about eating into some of those. But, we could climb. That's not what I wanted. From here, we could get another 45% climb, sort of like that sort of 98,000. So reject from that and still find ourselves in a bear market. So it is quite difficult to see. Now, one thing I want to do on the daily, I will just Stream's all good. Okay, thank you. Let's just close that. Let's just sort of hide some of these just so I can make it a bit cleaner. And let's see about putting. Right, we're going to do some fibs. But what we're looking for, so we can do that fib. Why have I drawn that fib? So just bear in mind, that was all-time high to the base in November. So after that crash around the cuddle time. And then look, we moved up. We hit this here at the 382 level. And then look what's happened. We've come back down. Actually, I got excited. That's not a level. Okay, fair enough. I was trying to see if price can give us any indication. Didn't get quite down to the 618, so maybe not the best. But I just want to have a look. In terms of if we then drew it from here, and this is the bottom, does that give us anything? I mean, what we've had this move down. We come back up to the 236. We're kind of hugging around this here. Just sort of looking at some of the levels that we can extend back down to. That 618 is just under 50k. That could be something to have a look at. And then on the top side, on the way back up, 74, 78, 82, 88. I mean, I think they're levels we kind of talked about on Friday. So maybe that kind of makes sense. We do this on the 4 hour. Actually, these work still in terms of the bottom of the candles. So that's okay. All right. I won't take any more time. I just wanted to see what some of those levels were. We've got it circled anyway. So 48k potentially. In terms of not fib retracement, a fib extension on the way back down there. Let's get throw some of these back on. And again, I was just about to say I'm sorry for being so bearish, but ultimately, I can only really talk about what I see, I suppose, or what I think is going to happen, and that's where sentiment currently lands right now. And as difficult as that can sometimes be to stomach or to talk about, I think it's the right thing to do. Go for it from there. 1 hour. I mean, this is the range we're in, aren't we? We're kind of in a little mini range at the moment when, we get up to 71.5, then we walk back down to about 67.5, and we're kind of working in and around it. There's nothing really too exciting there. What is this EMA? What is that? 300. Okay. We don't normally have that on our chart. Must have added it last week and pressed save by mistake. But you can kind of see the RSI is kind of moving sideways as well. Not the best for sort of any clear direction. Okay, let's have a look at BitTensor. Daily time. Oh, that's not BitTensor. BitTensor daily time frame. Let's just move the RSI down. So we drew these lines last time. Obviously, there was the 160, which was the base of the horizontal one there. And then we were kind of drawing this diagonal line down of sort of closes. I think it was on the 4 hour here. And what we can find is we flirted in and around these levels. But since that moved down on the Friday, as I said, we then had that move back up. So moved down the Thursday, moved back up on the Friday. But we've then just had steady falling away. And you can kind of see it is just steady away with its falling. I don't feel like this thing has found a bottom yet, unfortunately. And so for me, there's still another opportunity for retesting this low here of 140. And then when we break that, the start reality was back in 2023, the speed at which we moved up from $60 to $170 was pretty fast. There's a little bit of noise around about 130, and then after that, we're talking about these vectors here, 115 and 100. And that's it. Now, what I would say is, let's get rid of that. Each time we have hit this, we have bounced. Okay, so there's something about that of when we hit this level, we typically do, or in history, we've shown that we found a bounce. They've always been in times when the market is, it's 2-2 now. Come on, Leeds, sorry. Sounds like a hell of a game I should have been watching. So we see these big bounces from that. And so going back to those who are thinking, how and when should I get out? This is about the risk to reward, isn't it? And it's about looking at more than just what the actual price is right now and trying to find some levels of confirmation this thing is actually not bouncing from here. We got to get out. And it's a case of, do I get out at 154? Do I wait till 141? It's $13. That's, could be, it's an extra 10% from where the price currently sits, but from whatever your average buy is, who knows? And that's why I can't really give you an answer. Do I see a retrace to some of these, the 20 or the 10 or the 20? Yeah, absolutely. And the 20 is at nearly 200. And so ultimately we can see that. But nothing's screaming to me right now that we're recovering. We may just get another relief and then roll over, much like we've seen even on the lower time frames here, but we have basically seen since March of 2024. So I don't think the 4 hour really says anything different. You can really see how the 10 has just dictated this. And if it doesn't, the 20 catches us. 50's not even really had a sniff for about 2 or 3 weeks now. Argument to be said then, actually, maybe that's it. But look at this, like this buy here, but all the way back up. But it didn't last too long. It fell away again and ultimately ends up coming back down. So difficult to see where this is going to turn around. Very much dependent, in my opinion, on BTC. That is it. BTC will either lift these guys out of the mud, maybe not as high or as far or for as long, or it's going to help just sort of drive that a bit further down. I'm not going to go through these in detail, but BitTensor is not alone. Okay, BNB, similar kind of story. Dash, similar kind of story. Recovered a little bit, rolling over. ETH recovered, starting to roll over. Casper, the same. Link's the same. I'm not even following them all. Sol, SPX, SPX gone sideways. XRP, similar, about to look to roll over. Zcash, done that lift up. Gone sideways, starting to roll over. And then there's one outlier. And that outlier is Pippin. Pippin. Pippin has been an interesting beast to me, particularly trading, because I went long at 18 cents and I put my stop at like 16.5. And this thing got to about 16.5 or 15.5, and then it's gone and flown up. Almost would have, 2.5x from that position. You can't win them all. But this thing has been doing great, and it's just odd outlier that's doing well. People are trying to just capture whatever they can, and Pippin seems to be the one that's doing it. It was up 25% yesterday, or 2 days ago. It's up 40% today. It is, however, incredibly, not on the daily, but on the 4 hour and on the hourly, oversold. I am waiting for this thing to reset, and I will have another go at a long. I don't want to short it, even though it's high, because it can defy that for longer, and it is clearly illogical why this is moving up and nothing else is. But it's done very well. I know Reese is in it, and I'm sure he's spotted it, but I'm sure he's going to be doing very well with his positions on that one. But it is an outlier that's very strange. I'm conscious that I've been rattling on for an hour and 15 minutes. So ETH BTC, let's just have a look. I mean, there'll be no surprise here that this is just continuing to break down. Why's all that? I mean, look at all this. This was this summer of 25 when ETH just rallied up to 4,000 and left everything behind. It did it so fast. There's nothing in the way now to hold it up. You've probably got about 2.8, and then after that 2.4. It's going to see a hell of a fall. Symbolizing that ETH may have a much bigger fall amongst it than others. Others itself just not looking great. Things outside of the top 10 really getting pushed down. Just looks like every other alt, doesn't it? Green vector there, but nothing to me is screaming reversal. That's the problem. And the RSI isn't helping at the moment because yes, okay, it's low, but it's not biblically low. USDT dominance, so that peaked at nearly 9 to come back down, but kind of looking relatively strong for another move, a potential move up there. I forgot to do it. I wanted to do a chart which was basically total market cap, total 2 minus USDT and USDC. The reason I say that, I think I got it here. No, I don't. That's divided by Bitcoin, is the value of USDT and USDC is more than the value of Ethereum. So actually, you take those two out, that takes out nearly 17% of the market value. It's an incredible amount. That's really going to show a much better picture. I will post that in Discord afterwards. And then we look at everything else. China basically had some news to basically trying to stop everyone from investing in the dollar. Dollar's kind of turned around there. NASDAQ, okay, it's battling with the 50 EMA on the daily, but it has started to recover from that dip, that pullback. And it's only down 0.5% on the day. And again, the S&P is above the 50. It really is challenging all-time highs, kind of defying where things are. And then if you want to have a look about, the Bijan goes on about this quite a lot, the Russell 2K being the altcoins of traditional investment. And this thing's finding new all-time highs, and yet alts aren't. Really seeing that lack of interest in altcoins as a whole, which worries me. It has worried me for a while. Gold, hanging around 5,000 just seems like a normal number now. It's been there for so long. It went down to its 50 EMA on the daily. It's pulling back quite nicely. It's just slow and steady for gold, climbing back up. And the same with silver. It's almost boring now that it only moves $2.50 in a day instead of 100 or what have you. Platinum and palladium very similar. And then some of these other ones, Nvidia. I mean, nothing's really fallen away. Yes, we've started to see some recoveries, but not there. I'll talk about this another time. But Take-Two Interactive, have a think about this one, everybody. In terms of maybe, I'm thinking about adding this to the pension pot. The reason is Take-Two Interactive effectively own Rockstar Games. Rockstar Games make Grand Theft Auto, and Grand Theft Auto 6 comes out later this year. It costs nearly $2 billion to buy. They estimate in the first 60 days it could make anywhere from $5 to $7 billion. It's so much of a problem that they actually think it's going to impact GPD over the first couple of weeks that it comes out, because so many men are going to take that time off or skive off work to play it. And I just wonder what that's going to do to its share price. It's had a bit of a fall, and I just think, is that something worth just sticking in the investment pot? No financial advice there. It's one I'm mulling over, if I'm honest with you. I think that's probably going to be it. This is how the portfolio looks at the moment. Business BTC, 100% still. Personal, 25 still in BTC, 75 on the sidelines. That's it. It will not be going back into alt. Well, very unlikely to. Some of that 75 is in the trading portfolio, and we're trying to just sort of long and short stuff. We'll see. But yeah, that's where we currently sit with everything. I think that will be it. We'll just knock it on the head from there. Obviously, I might see some of you at the cuddle on Saturday. I don't expect it to be a big turnout. It is Valentine's Day after all. I'll be there on the Friday night. If anyone wants to come say hello, I'm probably not going to stay on the Saturday. I'll be honest with you. Might as well just make that journey home. But I will stay in the bar for a little bit afterwards. I'm not going to do a live call on Friday just because I'll be traveling down. But I will just, if anything major happens, I will obviously just comment on it before then. Other than that, if you have any questions, any concerns, you want to have a chat with me, I always say this, and I've taken a few calls over the last couple of weeks. So please, if you want to have a chat over the phone or whatever, more than happy to. If you just want to message and DM, if you don't want to, spill your guts to everybody else about how good or bad you've done this cycle, whatever, I'm more than happy to try and help things over. I don't have the answer for you, but I'll be an agony aunt to try and help you at least come to that decision, if that is what you want. Any just boring standard kind of questions you want some answers to, feel free to DM me, and I'll try and get through those as best I can. Other than that, enjoy the rest of your week. Hopefully see some of you on the weekend, and if not, I'll see you next Tuesday. Cheers now.